One thing I learned about Annabel yesterday is that she is an ocean swimmer. Now, to become the CEO of private banking and wealth at HSBC, it seems to me you have to learn how to swim with the sharks, don't you?
And sometimes through uncertainty. If you're growing up in Australia, there are lots of sharks and there's lots of uncertainty. But you just keep swimming and you just keep investing, for those of you who are missing the message at the moment.
Because every bank does it and defines it a little bit differently, I think we should start with the basics, which is where at HSBC is the dividing line between those two businesses of yours, private banking on the one hand and wealth management on the other?
Thanks. And look, before we talk about the dividing line, let's talk about the scale of the business.
Sure.
So if you look at global wealth at HSBC, we're about $1.8 trillion in wealth assets in around 30 countries globally, a little bit over 30 countries. So that's a very big business. In terms of where the dividing line is, generally it sits, we've got obviously the personal bank, then we've got the premier bank, and then we move into private banking. And that dividing line is around $2 million of investable assets. But obviously it depends on what people are looking for from a service, and we have to work with our clients and our customers.
Let's talk. I think people would be interested to know, given the scale of the business as you've just described it, what the strategic priorities for your businesses are, wealth broadly, but of course private banking is a bit different from those other two you mentioned, both globally and here in Asia-Pac.
Sure. So the aim of the entire business is to be the most admired retail and wealth bank globally for international customers, period. Then for the private bank, we want to be the leading private bank for Asian, international and entrepreneurial clients, again, globally. And we obviously want to be the leading wealth manager in Asia, period. And we believe that we can absolutely do that. I think the more interesting question is how, and particularly what are our competitive advantages? So I just want to outline three of them. The first is obviously our Asia strength. I'd be remiss to be sitting here in Hong Kong and not be talking about our Asian strength. We've been in Asia a tremendously long time. We're deep in many of our markets. We're expanding in so many markets. So for the private bank, we've gone onshore in India, in Thailand. We're expanding, obviously, we've done a recent acquisition from Citigroup in China, really deepening our presence, obviously, and offering wealth now in the Philippines as well. So significant deepening presence in, importantly, one of the fastest growing wealth markets in the world. So absolutely key that we're in Asia and that we're taking that wealth with Asian desks in Europe and in the US and around the world. Key there, international connectivity. You just heard Eddie talk about it, actually. That's an incredibly important part of HSBC. Not only is it in our name, but that's what our clients expect from us. And that's what we deliver, whether it's that Asia to the Middle East corridor, or whether it's the client in Hong Kong who's got the children who are going to school in the UK, going to college in the US, they need a mortgage, they need a bank account, and they want to make sure they get exposure to European and US equities. All of that is something we facilitate, plus, of course, all of their business accounts, which is our third competitive advantage, which is collaboration. We happen to be attached to one of the world's best global business banks with all of the ability to help our clients grow their businesses from innovation right through to multi-generational businesses and serve their wealth.
Across the geographic footprint that you just described, where are you investing most aggressively?
So when we look at, for clients or for ourselves?
To build a business.
Actually, let's say we're kind of putting our money where our mouth is along with our clients. So to build the business in Asia, heavily doubling down in Asia. This is a huge region for us.
More so than everywhere else?
I would say it's absolutely a priority for the group. So if you look at where we've put our money, we've launched in India. We've done for the private bank in India, we've launched a business. We've acquired an asset manager in India. In China, mainland China, we have launched a private bank, and we've also reinforced our asset management business there. We're also growing our insurance business through Southeast Asia and our acquisition in Singapore. So we're deepening in all of the areas that you would expect us to be in Asia, but we're also growing in the Middle East because, as Eddie said, huge growth area, a lot of connectivity to Asia, and a lot of investment going there. But in order to be a global private bank and a global business, you need to invest across the entire platform, in people for that personal connectivity, and in technology and investment products and capabilities to make sure that as a bank, you are a holistic service provider for anything that your clients might need.
$1.8 trillion in assets is certainly nothing to sneeze at, but as you well know, there are some true behemoths in this industry. Morgan Stanley and UBS at the top of the heap with $5 trillion or more in assets between their private banking and wealth management franchises. Bank of America is up there in the $4+ trillion neighborhood. I just asked everybody in this room to make a prediction about where certain things are going to be 5 years from now. Where will HSBC's private banking and wealth assets be 5 years from now?
I can't possibly make that prediction in 5 years, but what I will say is when we look at the growth in Asia, our expectation of the growth in Asia is 8 to 10%. Our expectation in the US is similar, and we look at the rest of the world growing on average around 6% in wealth assets.
On an annual basis?
On an annual basis.
This is regionally, not specific to HSBC?
This is regional and not specific to HSBC, and I would absolutely expect HSBC to well and truly outpace that growth.
So in excess of 10+% here, in excess of 10+% in the United States.
We expect to gain market share. So as I look relative to what we expect from market growth, we expect to gain market share.
We will be talking, and David certainly talked to Eddie Yu about some of the geopolitical backdrop. How is what we see playing out across the world affecting the strategic decisions that you make and your appetite for investing in certain parts of the world over others?
You know, one of the things about HSBC is we've been around for over 150 years.
We've seen a few things.
We've seen a few things. Our job around the world is to connect the various parts of the world. So we will continue to invest to connect the various parts of the world and advise our clients, as we advise ourselves, to continue to diversify and make sure that we're taking advantage of all of the pockets of opportunity and obviously diversifying to manage the risks.
I'm going to ask you a tough question. At least a tough one for this crowd, potentially. The pandemic helped to supercharge the Hong Kong versus Singapore rivalry, particularly the effort by both cities, as you've just heard from Eddie Yu, to attract wealth, and in particular, family offices. Who's winning, Annabel?
You know, Asia's winning. So as you look at that growth rate that I went through, you've seen a tremendous growth in Hong Kong, you've seen a tremendous growth in Singapore, and you just heard me talk about the expected growth. But we also have to remember that we're seeing in mainland China a tremendous growth also there. We know, obviously, we're investing in India. We believe India is the investment destination of the decade. That's an area of growth as well. So one of the reasons that we see our competitive advantage being based in Asia is the wealth across Asia. But I want to be fair and answer your question a little bit.
Okay.
I just want to give you one tidbit that it is really revealing of the growth in Hong Kong, and I think reflects some of the trends and the things that Eddie's talking about. So if you look at the first quarter of this year, we opened more than 130,000 retail wealth accounts in Hong Kong. 60% of those have international needs and are international. So that gives you just a little bit of a tidbit of the growth in Asia, but also what's happening in Hong Kong and the success of Hong Kong in this growth.
There is real competition among these centers, and it's not just Hong Kong versus Singapore. Obviously, the Middle East is doing its utmost to attract as much wealth as possible. Dubai, in particular, is a center that I would highlight. And, of course, London is still doing its part to retain a stranglehold on as much of the world's wealth as it can. And then, of course, there's New York and other financial centers. Eddie just told us that he wants to hear from institutions like yours about what more Hong Kong needs to do to attract as much wealth as it can. What are you telling him? What more do you want to see?
What I enjoyed about listening to him is that he's listening to everybody, right? So what I heard was amounts going up. That's pretty important. I heard channels widening. I heard a discussion around more interesting product. And what I heard overwhelmingly was the importance of looking at what the client wants. So he talked about the importance for rising affluence in Asia in particular, obviously in mainland China, and access to diversification. So I think he's thinking about all of the right things. I was really delighted to hear it candidly this morning. So,
is there any one thing in particular that you'd like to see Hong Kong do on top of what it's already done and what you've heard him say?
I think one of the things that he was saying was this nexus to the Middle East that's really important. So when we look at our business, I would agree with him, particularly on the trade. The bit that we are working on, and we're taking our clients from Asia to the Middle East and from Middle East to Asia, and we've had a series of exchange trips for some of our private bank clients, but also for some of our business clients, is getting the people relationships right. It's really important in Asia to get the people relationships and introduce people. Well, guess what? It's really important in the Middle East as well. I think that's the power that HSBC is bringing to our part of the equation, but also to get those businesses introduced to each other and make sure people deeply understand the investment options across those markets, into the markets too. So we don't just say Middle East and Asia, it's getting into sort of Hong Kong, UAE, Qatar, Kuwait, Bahrain, etc., Saudi. So really understanding more deeply. And that's what I heard him saying, and that's something that we passionately believe and are acting against as well.
There is some evidence, and you may be aware of it, that this rush to sign up as many family offices as possible, or at least in the rush, some people who shouldn't be able to get a registration, either because they're crooks or because they're charlatans, are in fact squeaking through. And I have to imagine that that creates problems for institutions like yours. If you have a registered family office, they'll come to you and say, here's my registration, I want all these services, and then at the end of the day, it proves to be vaporware. Are you worried at all that in this rush, there's the possibility, or the potential, I should say, for something of a race to the bottom?
We have to be eternally vigilant. And this is not a regulatory problem, it's not a bank problem, it's not a country problem. This is everybody in it together really have to make sure that as we build these markets and we build these businesses, that we make sure that we all do our diligence and we build a market with integrity, and we bank the right people in the right way. That is the core focus of all of our banks is trust. That's how banks exist, and we need to work with our clients to make sure that we understand them and they understand us.
We heard Eddie also talk about his interest in creating an opportunity within a regulated framework for more mainland capital to come to Hong Kong. At the moment, mainlanders are limited to transferring roughly the equivalent of about $50,000 a year outside the country. Of course, much of it is coming to Hong Kong. However, it's also clear that much more than that is coming to Hong Kong. And I wonder, how do you handle such situations at HSBC? There's this enormous opportunity to serve the wealth, but perhaps some questions as to its provenance.
We ask those questions, and if we're not comfortable with those answers, then we can't serve.
KYC comes first.
There's an absolute line. And that's our obligation to ask those questions, and we make sure that we do. Because, as I said, the integrity of the market and the relationship between the client and the bank must be absolutely transparent.
Can we talk for a moment about what it is that these clients we've been describing in very nebulous terms actually want from the bank? What is it? You know, again, you heard Eddie talk about the flavor of the month, private credit, for example. Whether it's private credit or other things, what are they asking for?
So, quick set of answers. So, with respect to what are they really asking for, they're asking for global diversification and asset class diversification. At the moment, obviously, they want access to everything, all the appropriate investments around the world, and they want them in every form, whether it's infrastructure or alternatives, private credit, private markets, any form of those things. The second thing they want, though, is global connections, which we also talked about. Absolutely critical, because people are looking to go local, globally. That's what we're providing. The third thing is technology. Make my life simple, make it easy, make me sophisticated. Absolutely important. And the fourth thing that we haven't talked a lot about is purpose. So what is happening right now is one of the biggest wealth transitions that we've ever seen in the world. In fact, period, the biggest wealth transition. People are looking to invest in their legacy, at the private bank end and really think about what does their generations after them look like, their legacy, their philanthropy. But everyone is also looking at climate transition and climate change. So it's all of those four things. Now, in the market, it's a longer answer.
I'm glad you brought up technology because I have one last question for you. No conversation, it seems, these days is complete without some kind of a nod to artificial intelligence. And I can see how AI has potential, as a customer-facing tool or in a customer-facing role at the lower end of your wealth business where people expect some degree of automation. But does it fit into the private bank? It's such a high-touch business and such a personalized business. Is there room for artificial intelligence there?
So you'd expect in retail wealth we're looking at everything, and you're right. So in private bank, the relationship with the personal relationship with the client is absolutely paramount. However, there's tremendous opportunity for AI to make sure that the role of the relationship manager and the investment counselor is as supported with all of the sophistication that we can possibly get to really help them in that relationship with the client. But there's actually also some very cool trading tools out there that our global banking and markets folks are working on. For those of you who know what I'm talking about, AI markets, I think there's lots of room for us to work together, and that's something that we're doing. So I think there's tremendous potential in AI, and everyone should be exploring it, whether personally or from investment perspective, either way, and certainly in businesses.
Annabel, thank you very much. Ladies and gentlemen, please join me in thanking Annabel Spring.
Thanks.